Joining us now is Vital Knowledge founder Adam Crisafulli and Bespoke Investment Group co-founder Paul Hickey. Good afternoon, guys. Paul, so yesterday, today, which day do we learn the most from?
A lot of noise signifying nothing, right? I think what we're seeing here is just a void of information and conflicting data on the economy. And so we haven't seen much in the way of corporate earnings, which I think makes these FedEx earnings coming up shortly so important to see what are companies actually reporting versus data, which can be backward looking and conflicting depending on whether it's a survey or hard data. I think as far as the broader market, I would stick more with the yesterday rather than today. We think it's still too early to write off the rest of the market in favor of the large cap tech and NVIDIA especially. So we would look for the market to broaden out, but not necessarily, it's not like a binary choice between mega caps and smaller caps, which is more biased going forward to looking at these other companies within the S&P 500.
Okay, and as we look forward to those FedEx numbers, maybe the next 10, 15 minutes, Paul, the stock's been in a slump for the last quarter. I wonder whether now it's all about companies needing to deliver a big surprise, either in the guide or in even further cuts. They're already in cutting mode.
Yeah, so I mean, I think as far as FedEx is concerned, for the stock itself, we're going to be looking at margins. You know, they've improved margins 3 quarters in a row. I mean, sales have just been abominable for the last 2 years. They've missed estimates 8 quarters in a row, and sales have declined on a year-over-year basis for 6 quarters in a row. So this report is expected to show 1% growth. I mean, so that's a win based on what they've done in the past. But the key is for FedEx itself and the stock is how that earnings number comes in with the margins, because they have been in a major cost-cutting mode and that Strive program to consolidate operations and eliminate redundancies.
Yeah, in the meantime, Adam, I mean, we have had some underwhelming corporate updates from a number of high-profile companies in the last, call it, 24 hours. Whether it's Pool, which that news broke in overtime yesterday, and it sent not only shares of that company, but peers and other types of companies that are tied to housing lower in trading today. Walmart with comments from the CFO there, which also put some retailer stocks under pressure today. How much do these types of pre-announcements matter as we do sort of sit on our hands here and maybe FedEx and a couple other big names this week notwithstanding await the next wave of earnings season?
Yeah, I mean, I think there's definitely a rising sense of anxiety in the market about the state of the economy, about the state of earnings in general. And you're not seeing a real safe haven bid in treasuries for a variety of reasons, one of which is growing concern around the fiscal condition in this country and the lack of political will to address that, and at the end of this year and into 2025. And so you have this perverse setup where you have safe haven money pouring into these mega cap tech stocks, and the leadership in the market, it's incredibly thin. It's almost absurdly thin. You saw it today, a lot of heavy selling in cyclical groups. It was really just tech and cruise ships. And so there's an aversion towards a lot of other areas of the market other than mega cap tech. And people are definitely very anxious. You've seen a lot of mixed signals on the growth front and on the earnings front. And so we'll be watching very closely, not just FedEx. Micron tomorrow will be very important for technology in the broader market, and then Nike on Thursday.
Yeah. Paul, I mean, the other piece of this, to go back to what Adam was just talking about, has been the torrid run we've seen in semiconductor stocks. Yes, we can point to NVIDIA as kind of the big elephant in the room, but in general, you've had such a move in ETFs like the SMH. You've seen it with the Philly Semiconductor Index as well. Yes, those came off in recent days, but we did see that rebound again today. Is this still the trade to be in?
I think when you look at this rally that we've seen coming up to last week, last Tuesday was the high there for the semis and NVIDIA. And what we said a week ago when we were talking is the world is probably not big enough to sustain these growth rates for NVIDIA. I mean, you're talking about $100 billion revenue run rate. You can't keep up that magnitude of growth that they've seen in the prior 2 years on this large of a base. So I think in that respect, what we saw over the last month, again, we saw a similar situation in March where the sector just rallied 15% over the course of a month on a nonstop rally, and it pulled back. Last March, we ended up seeing about a 15% pullback. In the stocks this week, over the last 3 days, we saw a much more muted pullback so far. So I think it's probably still too early to step in there and think that the worst is over for the sector after the last 3 days.
Okay.
We've just seen nonstop positive sentiment in the sector that things are just this rate of growth is just going to continue forever.
Okay.
And I just don't think that's going to be the case.